Well, private mortgage lending is our bread and butter. It's what we've been doing for many years. It's the backbone of the firm, and I've been studying all aspects of the law in relation to my chosen field, mortgage lending, and I've written a textbook called The Essential Guide to Mortgage Law in New South Wales, and I write a lot of papers, so I keep up with all the law, and we have a lot of mortgage enforcement matters, so we spend a lot of time in court at the coalface. So we have both practical and theoretical honing of our skills on a weekly basis. Depends how deep you want to go. A mortgage is a vanilla product. It's like the conveyance of a land. Every time someone buys a property, it gets conveyed to them. 90% of the time they gear it, so there's always a mortgage. However, when you go beyond just a mum and dad loan from a bank, things do start to get complicated. So construction finance is very complicated. Mezzanine finance can be quite complicated. I'm not talking about the actual mechanics of it. The mechanics are quite simple, but the subtleties of the law can be quite complex. One minefield, for example, is guarantees. It's settled law that if you interfere with a guarantee, let's say you let off one of the guarantors and you don't tell all the other guarantors, that can actually act to release the other guarantors. Now, if one of your security properties is reliant on a guarantee that you've accidentally released, not meaning to, then you can actually lose your security, which means you've lost your investment. So when you get into private mortgage lending, it's not the sort of thing you'd want the solicitor who did your grandma's will, who works above the fish and chip shop. It's not the sort of thing you get him to do. The industry has multiple layers of regulation coming from different angles, if you like. So there's a lot of consumer protection regulation, which is designed to protect borrowers. But there's also a whole lot of investor protection regulation designed to protect investors. That said, we live in a free country. So if a person who has a chunk of money they want to invest chats to someone at the golf course who wants to borrow money, there's no regulation whatsoever. They can lend to that person and just have a solicitor draw up a mortgage. So it's when the regulation that from a lender's perspective, in other words the investor, has to worry about is the consumer protection type regulation. Best thing to do is avoid consumer loans at all costs. Consumer loans are not for private investors. So once you make that resolution, that deals with all the consumer protection regulation, and you're left just with the investor protection regulation, and that's really invisible to the investor. The investor, if the investor were dealing with a promoter who wasn't licensed, it wouldn't mean he doesn't get his money back. It wouldn't mean his mortgage not enforceable. It would be the problem of the unlicensed promoter. If you're the regulation is designed to catch promoters of investment schemes, and if you're a promoter of an investment scheme, you're obliged to be licensed. The way they catch them is they say, is the day-to-day management of this investment with the person who's promoting the investment? So if I were a private investor and I decided to lend on a whole bunch of construction projects and I wanted someone to look after that for me, and I got my accountant to look after it, my accountant would be managing that investment, but he wouldn't have promoted it, he wouldn't have put me in, so everything would be fantastic. If on the other hand I got a call from my accountant and he said, I got a guy who wants to borrow money, how about you invest with this fellow and I will manage it. I'll collect the interest and so forth. That would be an unlicensed managed investment scheme, and that would be an illegal scheme.
But it's possible for him to promote those investments to you if he's got a license.
Yeah, if he's got a license, he can both manage and promote the scheme.
Just because he's licensed, though, does that make it a safer investment?
ASIC have a straining effect, if you like. So is an unlicensed pilot safer than a licensed pilot? The answer is yes and no. If your licensed pilot shows up to the airport and he's got alcohol in his breath, I wouldn't get on board the plane, license or no. But then again, generally speaking, you tend not to get your license unless you can satisfy ASIC that you have the skills necessary for what you're undertaking. So ASIC have two licensing regimes. One is for wholesale investors and one is for retail investors. But the key test is exactly the same. Does the licensee have the skills necessary to do what they're proposing to do? So if they're dealing in derivatives, do they have the skills necessary to deal in derivatives? If they're promoting a mortgage scheme, do they have the skills to promote a mortgage scheme? And that comes down to experience. Do they? So they give a CV to ASIC and ASIC review it. That said, you shouldn't rely on a regulator to decide whether or not your investment is a good idea. It's more a straining element. It keeps out the worst of the riffraff, let's put it that way.